We're joined by Maribel Lopez, founder of Lopez Research from San Francisco. Welcome to the show.
Thank you.
So let's start with your reaction to this latest data on Netflix earnings and subscribers and what it says about the health of the company.
Well, obviously there are upsides and downsides. I mean, revenue and subscribers came in very good. EPS was down. I think everybody was shocked at the predictions going forward. And really the market was overly optimistic on what is considered never-ending demand. And I think Netflix was really trying to reel them in. I expect that subscriber growth will be better than what they're suggesting, but still they didn't want Wall Street to really be frightened if they came in with lower numbers going forward.
And clearly when it comes to streaming, content is king. So how does Netflix's approach to content compare with the others in the streaming space?
Netflix is way ahead of the game on this. They have been building out a deep content catalog for a long time. They have good contracts signed. They probably have longer standing contracts signed. They do a lot of their own content, and they're doing it also internationally. So really they're firing on all cylinders, and they're actually ahead of the game even in terms of having content recorded for the rest of this year and a little bit into next year. I think it's going to take many quarters, if not years, for the competition to catch up to where they are in terms of how fast they build content.
And speaking of the competition, we know that the industry is getting more fragmented. So many streaming services available. It feels like you essentially have to cobble several together just to get the content that you want. Are there concerns about streaming service fatigue?
I don't worry so much about streaming service fatigue as I worry about streaming service switching. So right now, Netflix has a great content catalog. The minute that there's a blip, there's about 5 or 6 other good alternatives where you can turn off Netflix, move to something else for a while, and serially move between these content services. There is effectively no switching cost.
So then how can Netflix keep up this pandemic momentum and really set themselves apart, especially as content continues to shift to some of these other platforms?
They have to get content faster. They have to keep investing in getting those wins with the big names. This is just an unrelenting drive to push content. So I really worry about 3 things. I worry about saturation, competition, and content costs for Netflix.
And we did see that Netflix promoted Black productions and Black stories, especially as the Black Lives Matter protest came to the forefront. Talk about the company's strategy of really navigating these social issues as using that to seek out and promote more diverse content.
So in general, I think Netflix is very good with analytics and understanding who's watching their programs, what types of things they like to watch, and they've been building out a deeper content catalog based on that. I think that the move to having diverse content, to taking on social issues like Black Lives Matter is really very important, and they were ahead of the curve on that, and I think they'll continue to be ahead of the curve based on the power of the analytics and artificial intelligence they have in their systems.
Now, obviously, we are in uncertain times, and Netflix did have its plans before the pandemic obviously struck us all. What do we know about the company's plans for the remainder of the year?
I think the remainder of the year, you can't really do too much about content. It's still up in the air in terms of how and where we can record. Fortunately, they believe that they have a catalog that will allow them to make it through this year. Where it starts to get rough is in Q1 and Q2. I think Netflix just has to keep on keeping on and try to figure out how they can generate more content faster in 2021 so that they can actually shrink that gap.
And what are the expectations in the US and globally in terms of expanding?
Expanding subscriber base?
Yes.
I think we're going to have to look at a subscriber base that is going to be relatively flat. I mean, they're not going to come in with another 10 million in Q3, Q4. We have to look and realize that there could be some saturation. We're also not taking into account the greater economic impact, which we still have yet to feel the brunt of as more employment rises in various countries around the world.
And speaking of some of the obstacles, what do you think could prove to be the biggest obstacles when it comes to longer-term growth for the company as a whole?
I think content costs are the greatest challenge that any of these organizations have right now. Netflix was ahead of the game in terms of securing content, but now people realize how valuable that is, and the prices have gone up.
All right, well, thank you so much. Maribel Lopez there, founder of Lopez Research, joining us there from San Francisco.